Sometimes a company's financial report is pretty straightforward, and other times, it's a puzzle. Well, OLA Electric's latest quarter is a real head-scratcher. It's the story of complete contradictions that, honestly, on the surface, just doesn't seem to make any sense. So, let's try to piece it together.
Okay, so get this. On one side, you've got their revenue, the total money coming in, which took a massive 55% nosedive compared to last year. But then, on the other side, the actual profit they made on each scooter they sold, their gross margin, soared to a record 34%. How how does that even happen?
And that really brings us to the big question, right? When a company sells way, way less, but makes way, way more on each individual sale, is that a sign of deep trouble, or is it actually a stroke of genius? Let's dig in and figure it out.
All right, first up, decoding the financials. Let's start by looking at the hard data, the raw numbers.
This table just lays out the whole paradox perfectly. Look at that. Revenue fell off a cliff from over 1,000 crore rupees to just 470 crore. And you can see why. Deliveries cratered by 61%. And this is the crazy part, look at the bottom half. Their gross margin nearly doubled, and they actually narrowed their net loss. They lost less money, even with a total collapse in sales. Just let that number sink in for a second. Just over 32,000 scooters. For a company that was built on this idea of super fast growth and just grabbing all the market share, this is a shocking, shocking slowdown. It's a huge signal that something fundamental about their strategy has changed. So what is this big change? Well, the company has a name for it. They're calling it a structural reset. Let's look at the story behind those numbers. OLA's CEO, Bhavish Agarwal, basically put it like this. Hey, we knew these numbers were going to look bad. This wasn't a surprise. This was all part of the plan. The whole point wasn't to win the quarter, but to completely rebuild the company's financial foundation for the long haul. So here's the key takeaway. This structural reset is a pivot. It's a massive shift away from that classic growth at all costs mindset that you see in so many startups. Instead, the focus turned inward to fixing the business model, to jacking up profitability, and even to dealing with things like service quality. And here's the engine that made this whole reset possible. They took a chainsaw to their operating expenses. I mean, look at this. They've slashed the quarterly costs from a peak of nearly 800 crore all the way down to 432 crore, and they're aiming to go even lower. This intense cost discipline, that's the key to understanding how their bottom line got better. But okay, cutting costs is one thing, we get that. How did they actually increase the profitability of each individual scooter they sold? How did they pull off that record 34% gross margin? Well, according to the CEO, the secret sauce is in their manufacturing. By making more of the components themselves in-house instead of buying them from suppliers, that's what they mean by deep vertical integration. And by moving to a more efficient vehicle platform, they managed to drive down the cost of producing every single scooter. And here is the real payoff for all that painful cost cutting. Because their operations are so much leaner now, the company only needs to sell about 15,000 scooters a month to break even. That makes profitability a much, much more achievable goal. It's not something that depends on absolutely massive sales volume anymore. All right, so that's the company's story. But is it credible, or is it just some really good positive spin? Let's bring in a third-party view and see what an outside analyst from the firm MK had to say. And it turns out, MK's analysis pretty much confirms OLA's story. They came to the same conclusion, that the company is, in fact, deliberately choosing profitability over just chasing market share. They don't see it as spin, they see it as a very real strategic shift. The report confirms the better margins and lower costs, for sure, but it also adds some really crucial context. MK went ahead and lowered its own sales forecast, basically acknowledging this new reality. And yet, and this is a big yet, they still expect margins to improve even more, and they're keeping a buy rating on the stock. That's a pretty strong vote of confidence in the long-term plan. So if the scooter business is now all about stability, where is the future growth going to come from? Well, OLA is making a very big bet on a completely new category. That's right. After completely turning the electric scooter market in India on its head, OLA is now setting its sights on motorcycles. And listen, this isn't just some vague idea they're throwing around. There's a real, well-defined plan here. They've already shown off 4 pretty awesome concepts. They filed patents for the designs, and they've given a clear timeline, with the first deliveries expected in the first half of fiscal year 2026. This is their next big growth engine.
and it's coming soon. And this right here shows you exactly why they're so excited about this. The electric motorcycle market in India, it's almost completely untapped. I mean, while e-scooters have taken off, less than 1% of motorcycles sold today are electric. For OLA, this isn't some crowded market they need to fight for. It's a wide open field they can basically help create from scratch. Okay, let's put all the pieces together. What does this all really mean? Is this a calculated gamble? The story of this quarter really has 4 parts when you break it down. First, they accepted the short-term pain of much lower sales. Second, they used that slowdown to completely reset their costs. Third, that move resulted in incredible, industry-leading profitability for every single scooter. And finally, they've laid all the groundwork for their next big chapter, motorcycles. So we end up right back where we started, but with a totally new perspective, right? OLA took a calculated gamble this quarter, sacrificing that headline growth number for long-term stability. The question now is, with a much more efficient business and a huge new market to conquer, have they finally figured out the formula? Have they cracked the code for long-term profitability in the incredibly tough Indian EV market? I guess only time will tell.